No way. Why not? Because no way. No way.
Hello everyone, welcome to another market analysis, market breakdown. Let's see what Bitcoin has been up to. But before we do any of that, if you guys feel free to follow the IG, I've got an IG page going. So hit the follow there, let's connect on there, let's have a good laugh. Right, what have we been up to? What's Bitcoin up to and what have we got planned moving forward? So let's take a look. First things first, we're going to make it nice and brief today. Let's see what we were looking at. So we said we had this downtrend, we had a break in structure bullishly, and because we've had a break in structure bullishly, that made this a targeted high, followed by this high, followed by that high, followed by that high. We had a nice juicy trend line of curve of liquidity that we're looking to run, and we've started that process. We've started taking, slowly but surely, we're starting to take all those stop losses. We've got these stop losses, they're gone. We've got these guys, they're gone, and we're looking to take these guys out next. We said because we've rotated past the equilibrium, we're now in a nice range over here, this being our range low, this being our range high. And what do we expect at our range high or range low? We expect an oscillation, we expect a rotation. Price is likely to rotate at our ranges, hence why we trade ranges. We look to short at the top of our range and long at the bottom of our range, where we've got our discount region. So we were saying, right, we've got this range, we could blast off, and if we do blast off, we're looking to enter on that retracement. That retracement could come in close to this 12-hour demand, which is confluent with a value area high on our POC that we had over there. But we also said, well, what are the obstacles on our way? Obstacle number one, we've got this 8-hour supply over here. Obstacle number two, we've got another 8-hour supply all the way above. But we're not there yet, so we're just going to focus today on what's going on internally here, and we're going to see whether there are any trades we could have entered, we could have capitalized on based on these strategies, or the strategy we trade using at Trade Journal. So let's get straight into it. Now, as of that stream/video, let's say we were around here. All right, let's say we were around here, and let's see what price has been up to. Well, what can we see? Well, we can see that following our break in structure, right around here, following that break in structure, we retraced, we pull back into our old zone, this being our old zone. So this whole region is our old zone. So we can actually, let's call that a demand zone. Okay, so this region, the blue/region being our demand zone. All right, what does price do? Well, price breaks out and then it pulls back into the zone, but it doesn't go deep into the zone. It simply reacts off the top region of that zone. Let's just do a quick analysis of the volume profile for that zone. Let's see exactly where price went. Well, price kind of just came back to the POC, didn't it? It came back to the POC and then continued further up. And then what did price do shortly after that? Well, after that, price decided, well, I'm going to create another range. Price decided, I'm going to create another range. All right, and so we have a new range here, okay, which we broke out of that range. So we broke out of that range, but it wasn't a crazy break, honestly. It wasn't a very aggressive break. So we break out of that range slightly, just a tiny break out of that range, but regardless, what does price do? Well, price decides, well, I've broken out of that range. I'm going to need to retrace at some point. Where best to retrace? Well, why don't I retrace between the value area high and the POC? So that's what we got here. We got a nice bounce, from that level. So as we can see here, we've got kind of, I like to call this a range cascade. All right, so we've got range upon range upon range upon range, or demand zone upon demand zone upon demand zone upon demand zone. All right, now what does that do? So we've got range number one, range number two. Shortly after that, we have a new range forming, right? We've got range number three. So this would be it. Range number three. Now at this point, I'm thinking, right, these break-in structures, they're not looking as convincing as I would want it to be. So consider this break-in structure all the way to the high. We've got about $1,254. If we consider this break-in structure to that high, we've only got $317. Now, what am I thinking there? I'm thinking, well, we're starting to slow down as we're coming to this high point. We're starting to lose momentum. Now, this is indicative of either the longs, the people that have been long from down here starting to take profits. All right, so the market's going from a strong bull trend to potentially a ranging market, or B, people or sellers starting to come into an equilibrium with the buyers. All right, so we're gonna have to look at the next break-in structure to see what price did. Was it aggressive? Was it a massive buy from the market? So if we look at our next break-in structure, if we play that shortly, now we're gonna see what do we expect after a break-in structure. By the way, guys, we expect after a break-in structure, we want price to come back down. The price is gonna retrace back into our zone. We call it a pullback to zone, and that's exactly what price is doing here. It breaks out and it's gonna retrace back into our zone. So if we play that and we continue, well, let's see, where did price retrace back to? Well, it didn't come as deep as it did for the previous breakouts, did it? So for breakout number 1, it came quite deep back into at least the POC. Breakout number two, it not a crazy bullish breakout, but it did come back quite deep into our POC. Now breakout number 3, which is what we're seeing here, it kind of just touched the old range high, kind of kissed the range high and decided to carry on forward. Now guess what? I actually don't scalp these continuation plays. Because I can't, sit on my computer screen and just have a look at the chart every single minute of the day. Yes, I can set alerts, and I do set alerts for the highest probability regions, the regions I think have the highest, likelihood of getting a reaction from. But there's no reason why you guys, if you are trading full time, there's no reason why you can't capitalize from these moves. It's coming back to this zone. There's no reason why you can't long that for a scalp. It's coming back to this zone. There's no reason why you can't long that for a scalp. All right. Same again here. It's coming back to this zone. There's no reason why you can't take that up. Of course, the higher and higher you get to that swing high point, the more hesitant you should be. All right. But we already have the justification as to why price is coming all the way down, all the way up. It's running these liquidity levels, all right, and it's providing the juice. And this supply zone is acting as a magnet. It's drawing price towards it, and price is saying, right, I'm going to head towards you, and I'm going to see whether you can stop me, and I'm going to see what happens when I get to that zone. So let's carry on. So we've had our demand cascade. What happens next? We break out. We come back into our zone, and let's see what happens next. Well, we form another demand range. What do I mean by that? This is a new demand range. Okay, and what happens? So we have our new range. Price breaks out. Not the craziest breakout again. If we measure that breakout from the break-in structure all the way to the high, we're looking at around $328. That's not a crazy amount. All right. So what's that telling me? That's telling me be wary, and be ready, because there may be some shorts in play, because I like to call it the amplitude of the break is not as high, and we're getting a decreasing amplitude. What do I mean? The first amplitude, we're getting 1,254. Second, we're only getting 317, and third, we're getting about 347. All right. So anyways, what happens next? Well, price breaks out of our range, retraces back into our range. And what were we saying yesterday? Well, yesterday we were saying the juiciest instance we would want to see is if price does not close above our green line, but at the same time it wicks our supply zone. It simply kisses the supply zone, breaks structure, and reacts down. That would be the entry to enter that short. So let's see what happened. We're getting close to that zone. We haven't quite tagged the range high, all right, but also we're thinking to see whether are we going to tag this supply zone. Well, let's see what price does. If we play that, of course, on a 10-minute structure, you probably won't see it as clearly, but the higher and higher in time frame we go, we're going to see that indeed in the higher time frames, this wasn't a close, it was actually a simple wick of that structure. All right, So there we have it. That's exactly what happened. So we go into our structure, and what we're going to take a look at now is we're going to look at higher time frames to see. We're going to simply look at this region to see what happened here, as to whether on the higher time frames it was a close or whether it was a wick. All right, remember, if it is a wick, that's great because we're looking to get that rotation down. So let's see on a 12-minute. Let's go to a 12-minute. Still looks like it closed above our range high. In the 30-minute, it's still looking like a close above our range high. And the 45-minute, it's still looking like a close above our range high. What I'm going to do is I'm going to get rid of this so we can see this clearly. All right. Okay, so we still closed above our range high. If we carry on to perhaps the 1 hour, okay, we're looking like a close above our range high. But what can we see, guys? We can see that it's starting to look wicky into our supply. All right, if we go on a 2 hour, oh, there we go. On the 2 hour, it did not close above that prior level. On the 2 hour, it simply wicked that prior level, tagged our supply zone, generating the fuel, generating the juice, taking all the energy it needs to rotate. And that's exactly what happened. All right, so even though on the lower time frames, let's say on the 25, on the 30 minutes, it looks like a close, which you might think is a continuation move up. On the higher time frames, it was simply a wick. So what does that mean? That means as soon as you see that, you're looking to say, right, where can I enter into this trade? Can I get a counter trend model 1 or model 2 in order to enter this short? All right, so if we go down to the 12-minute, well, let's see. So on the 12-minute, if we follow the structure up, let's see if we had an entry. All right, because this was a trade that was given well in advance. All right, nice one. We could have collected, and if you did collect that, well done. You know, some people, what they do is they say, do you know what, I'm just gonna, because I've got a student at the moment and he says, listen, TJ, all I do is I just put a limit order at the levels and 8 times out of 10 it works. All right, now guys, that is how some people trade, but I would not recommend doing that. I would recommend always wait for your confirmation. So let's see, did we have our confirmation? Well, if we follow our structure, we've got high, low, we've got high, okay. So what does that mean? That means before we can really justify this trade, we need to lose this level here. This is the last higher low that we need to lose before we can enter the short. Okay, that's on the 12-minute. Let's see, did we have another entry perhaps on the 10-minute? Okay, so on the 10-minute, on this last decisional leg, there is nothing there. Okay, I guess now there is. So on a 5-minute, if you were looking at this on a 5-minute, you know, which is still a feasible time frame to look at this on the 5-minute, we did get a higher high, higher low, higher high up there. Okay, and not only did we get that, making this the decisional / critical area to break, you know, it looks like we may have actually done a nice second entry on the top. So I'm going to look at the 3-minute just to investigate that. And on a 3-minute, well, on a 3-minute, we don't have quite clear structure. It's not the clearest structure on a 3-minute. But if we look to the 2-minute, we may actually have clearer structure. And indeed we do. Now, I wouldn't always say trade on a 2-minute, of course. But, you know, the more experience you get at using this method, you can do it. You can twang it. So here we go. We set the high. We retrace. We sweep that initial high, remember, for that second entry. Shortly after, we break structure. Our break of structure being here. That's our break. Okay. And after that, we retrace back into our old supply. All right. And then we flush down. Now, if you were to do that, where would you have set your stop loss? Your stop loss needs to be over there. That is where you need to set your stop loss. All right. So I guess on the 2-minute, we had an entry. But I'm sure if you entered on the 2-minute, you must have been bricking it. You must have been bricking it because you would have thought, oh my goodness, look how deep this retracement is going. But even though it went quite deep, it still did not take out your stop loss. And why would it have come this deep? Well, perhaps there's a supply zone over here. Okay, perhaps there's an unmitigated supply zone it wanted to tag before it carried on. All right. But regardless, let's say you weren't too sure about the 2-minute and you're hesitant using the 2-minute. So you say, do you know what, TJ, I'm going to stick to the 5-minute and I'm going to wait for my 5-minute entry before I play around with that setup that you gave. All right. So in that case, what you're going to do is you're going to wait for that last higher low to break on the 5-minute before you look to enter. So where is that last level? Well, that last level was here. So what we're going to do is we're going to extend that across. Boom. So we didn't really get a break right until here. All right. Now, for those of you who followed me for a while on this channel, you are probably thinking the same thing. Man, the risk to reward on that is not looking as juicy as it was on a 2-minute. Yes, that's correct. Your risk to reward will be hampered, the higher the time frame you go. The more confirmation you get, your risk to reward will be hampered. And it makes sense. The more information the market gives you, the more expensive that information is going to be. You're going to have to pay more to get that higher time frame confirmation. And the way we pay more is through a higher risk to reward. All right. So what we get here, not higher risk to reward, a lower risk to reward. So if we were to enter there, our risk to reward, is significantly increased compared to if we were to have entered on this level, all right, which is that 2-minute level. Okay, just to put that in perspective. Now, did we get a retest though? Because I'm sure a lot of you wouldn't have entered on that break. Did we get a retest? We did get a retest, but it wasn't a very long-lived retest. It was just a brief retest, and then we carried on. So where would you have entered that trade? You would have entered that shorts right around here, all right? And that's still not a bad trade, guys. Why is that not a bad trade? It's not a bad trade because of the following. First things first, we realize, okay, that we have tagged supply. And this is not a normal supply, this is an 8-hour supply. So the chances are we're probably going to get a reaction of that 8-hour supply, okay? Now, also, what some of you would have noticed is that if you were to zoom out, you'll see that we had a nice trend line of liquidity developing over here. So we had a nice trend line of liquidity developing over here, which means just the same way we had that curve of liquidity gets run. This gives us another confluence that we are potentially going to get a rotation down. All right. So that was a short trade. So I entered that one, and that's a short trade that I am currently still in. However, I have completely de-risked that one. I've moved that stop loss to entry, okay, and I've taken quick profits. Now, why have I done that? I've done that because as I was monitoring the charts, I was actually looking for not just a short, I wanted to look for a long as well. And I wanted to look for a long because I wondered, what if, that high that we've put in is not the final high? What if we're going to get a rotation to get a second entry on that 8-hour zone? So I'm going to talk you through what I mean by that. So I entered a long after that short, and I entered a long right around here. Firstly, because we had that trend line, so this was a key zone. And not only that, we formed a nice range. So let me just play that so you guys can see that range. So we've set, where is my range? Well, we set our range high up there. We've set our range high up there, all right? We kind of set the range low here. So this is not what I'm looking at as the range low. We set the range low here, and then we confirmed the range here. All right, now what do I mean by that? I mean, if we were to draw our range, this was my initial range, okay? Now, at this point, let's just take this really slowly so we can understand my thinking process here and what happened. So at this point, I'm thinking, right, we've obviously tagged that level, trades in profit, which is good. Market Cypher looks like it's bending down. However, we were getting a potential hidden bullish divergence. That means as price is going up, our momentum is going down. But I won't talk to you about that today. We'll save that for another time. But anyways, I was saying, right, as this structure is coming down, if we were to get a change in market structure on this downward leg, that means we're going back up. We're going back up to test this high. And not only are we going back up to test this high, we're going back up to a region that could make sense for a nice second entry. So I'm going to make my range nice and thick, and I'm going to make it red. Okay, so we're going back up to potentially test this level. So what happened? Well, price came down into the range low. All right, confirmed the range. However, price failed to break convincingly down from that range, which would have justified the initial short. That would have made me stay in that short. However, price then decided to rotate up. Okay, it didn't really break structure. This is not a breaking structure. And for those people who I teach know exactly why this is not a breaking structure. Many traders would see this as a breaking structure bearish, but this is not a breaking structure. All right. So what did I do? I waited for that rotation. And then as soon as I saw a change in market structure, that change in market structure would have happened right around here. So we had a market structure looking like this. All right. That change in market structure would have happened about here. Okay. I entered on this candle here on that break in market structure. All right. And I was willing to take that all the way up. And that's where we are now. So that's where we're currently waiting for. And you've guessed it. What's my next trade? Which trade am I looking at? I'm looking at a second entry off this range high. So I'm watching the charts to see what happens. If it breaks above it, great, that's fine. I'm going to look for the retracement leg as we did for all these ranges. But if it doesn't, I'm looking to sweep that all the way down. So that's it. There we have it. If you found the information useful, don't forget to hit the boost, hit the follow. We've got the boot camp coming up on Sunday. That's the last Sunday of the month. So if you do want to get involved with that, drop me a message, hit me up on Discord, hit me up, and we can organize that for yourself. Otherwise, have a lovely evening wherever you are in the world, and I will see you tomorrow.